Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, May 30th, 2018. Take a look at the cues here, folks. I want to talk a little bit about this. So you basically have sideways consolidation. Obviously, we keep dipping down and then reversing. Yesterday, a pretty decent sell-off in the markets. Today, we're bouncing right back. But look at this little high pivot. So this is your bogey level. This is the level you want to focus on as an investor or a trader. As long as you do not take that out, the markets are somewhat vulnerable to the downside, although I have to say the pattern itself is slightly bullish. Now, if you violate that to the upside, you're going to break out, and your target is going to be a double top at 175. So this is just standard, easy technical analysis I want you guys to be aware of. Now, interesting little factors today. We're seeing the Qs up about 0.75%, but if you look at the spiders are doing much better. We're seeing a gain of almost 1.5% on the spiders, mainly because energy is rallying today. So one of the reasons yesterday we saw the S&P down big, but we saw energy down and money was rotating into tech. So tech wasn't getting beaten down quite as much. Well, we're now seeing that reverse. Money's flowing back to technology, back to energy, away from technology. And you can just look at stocks like, Netflix. For a day like today, where the Dow is up, 300 points or whatever. I mean, you should be seeing Netflix up $5-6, maybe more, but it's not. In fact, it's not even taking out yesterday's highs, even though the market on the S&P took out yesterday's highs already. And you can see the chart up here. I mean, we're creeping up $3 on the day, decent little move. But again, it doesn't look like there's a lot of money flow here just yet. And if you look at Amazon, I mean, it's not much different here on Amazon. Amazon's up a little bit, but it's only up about 0.5%. Which is not a big move for Amazon as well. And by the way, just looking at the Amazon chart here, see this wide range reversal bar from earnings? That is basically still an inside bar bearish pattern formation if you look at all of this chop because you never took out this high yet. So just be aware. I mean, as much as I think the pattern on the Qs is decently bullish, you got to make these big boys who have been leading the market prove themselves in the technology sector, meaning that you got to see Netflix take out the recent highs and start acting better. Amazon needs to start acting better. Same thing for Google. I mean, if we bring up Google here, I mean, you'd think, oh, this is a big rally day. Google should be up big, but it's only up 0.75% today. Not a big move at all. So yeah, I mean, just keep an eye on these things. And again, if you compare that to the SPY, SPY is rocking and rolling here. Up $3.75. And by the way, look at this pattern here. So you haven't confirmed above this trend line breakout yet. A lot of people would assume this is a breakout. It's not a breakout just yet. But nonetheless, the pattern still continues to be slightly positive, which again, just like the Qs, it is positive, but it can fail. So basically, the way I'm sitting here is I have a few shorts on the table. I have a few longs. Overall, I think the market is vulnerable more to the downside, meaning if we start to break down, we're going to get a bigger move to the downside than we will to the upside. I think the upside risk is only, back to basically 280 on the spiders. So you got about $7 to the upside. But I think if we start to break down, you go to 240, which is about a $33 move on the spiders almost. So I mean, you can see there how, if you're playing the risk reward, being long here, even though I think it's favored to go up a little bit, there's not a lot of reward to that factor there. And obviously, if you're short and you do break down, you're going to make a lot more money. A lot more money. But the question is, when do we break down? Now, I want to make that clear. Even if we do go to the 280 level on the SPY here from about 272 and a quarter here, or 3/4, I want to be clear that this year, I think there's another major wave of selling later this year that's going to come in most likely during the next Mercury retrograde that comes in late June. So late June through mid-August is Mercury retrograde. I believe that is going to be the trigger point where you're going to see this market break. So in theory, you could hold up in this market and you could float to that 280 level on the spiders into June and into late June. But once you get to late June, watch out below. Just to go over how powerful the cycles are, folks, and I want to just go over this because it's fascinating, and I've been learning more and more about cycles myself. It's something that I've started to use more and more in the last, I would say, 3 to 5 trading years, and even more so this year because it's becoming more and more important. But this high pivot right here, which was the all-time high on the S&P 500, all-time high on the S&P 500, we were going up nonstop for years. It stopped on a dime when you had a super blue blood moon. Now, what's so important about a super blue blood moon? Super blue blood moon. Say it 5 times fast. The reason it's important, folks, is it's an event. It's a lunar event that only occurs once every 150 years. And the market literally stopped on a dime there, and look at the sell-off that it caused. Now you might say, okay, well, one time, one event, just normal. All right, that's just luck. Well, let's talk about that, because after that, the market started to rally up, pull back a little bit, and rally to the highest point since that point. What did this coincide with? Basically, to the day, Mercury retrograde hit earlier this year, and that was the next big flush to the downside. So what I'm saying to you is, as now look at this. Look at the market since then. Up a little bit, down a little bit, up a little bit, sideways, sideways. And my guess is, you could pop up here and head back to this 280 level right here into late June. What happens in late June? Mercury retrograde hits again. And again, if you look at how things occur, more wars are started, more rhetoric, crazy rhetoric is started during Mercury retrograde periods than at any other point throughout history. It's pretty amazing, actually. I mean, if you look at big wars, when did they begin? Mercury retrograde. All right, now I'm not saying, by the way, I'm not saying that a big war is going to begin. I'm just saying that the tendency for aggressive behavior and wildness occurs during a retrograde period, a Mercury retrograde period. And again, this is very, very important. You're going to watch this, folks. I mean, I'll tell you this. If you go back 10 years ago when I was doing technicals with my partner here at themoneystocks.com, no one on CNBC was talking technicals. It was all fundamentals, PE ratios, etc. Now, after we've done it for a decade, they're all talking about technicals on the charts. In fact, Fast Money every day, basically technicals on the charts. There's at least a major signal, and they constantly talk about technicals. Interestingly enough, what you're going to see is over the next 5-10 years, you'll start to see the astrology, the lunar cycles, the solar cycles start to come into play here, and people will start to talk about them more and more. And it's just the way it works. I mean, we're just giving you guys the information ahead of time, let you learn. Obviously, we have our proprietary techniques that we've given you guys, such as confirmation and time counts and so forth. But this is information that you have to be aware of, because it will literally dictate. You watch. The next big move in this market, the one where we head to 240 on the spiders, likely occurs, or likely starts, I should say, in late June, early July. Okay? So anyways, I'm going to let you guys go with that thought in your mind. But bottom line is, come join us at inthemoneystocks.com. And again, just for proof, they always say proof's in the pudding. Take a look here. I want to show you this, folks. I want to show you the track record here. This is our website, obviously, here, inthemoneystocks.com. And obviously, I'm just showing a little piece of it. I can scroll over here. But right here, you have the Research Center track record. We had another winner yesterday. I closed out VXX for a nice gain last Friday. So, I mean, you had Friday and then the 3-day holiday weekend, and then we come back on Tuesday. So, yesterday was Tuesday. We had this winner right here. All right. On Friday, we had this winner, and we had SCO, which was another winner. I mean, just continue. I mean, look at this. You see a couple losers in there, but look at all the green. I mean, this is incredible, folks. I mean, this is just nuts. This is this year, by the way. All these trades were taken this year. I think it's north of 100 swing trades. The action is great, and look at the net gain there, 429, almost 430%. Now, granted, understand that that's if you put all your money in every position we've ever taken. We never advise that. We say be conservative, 10%, 10% max in each position. Even if you did that, you're up 43% for the year. Go find a hedge fund that's even up a quarter of that. Go find a hedge fund that's up 10% this year. I'll be impressed. You won't find really any. Maybe one up 10% this year. Okay? But not up 43%. I'll guarantee that. Our members are literally killing it. So come take the 7-day free trial here at inthemoneystocks.com and profit with the best. Learn from the best. Become the best. Take care.